Thank you so much for joining us on the Dwelling Show. I'm your host, Ola Dantes. I've got the incredible Chris Miles with us today. Hey, Chris, how you doing?
Great, Ola. How are you doing, man?
Doing fantastic. So, Chris is the cash flow expert, anti-financial advisor. He's a leading authority teaching entrepreneurs and professionals how to get their money working for them. Today, is also an author and a podcast host of the Chris Miles Money Show. It's been featured in U.S. News, CNN Money, Entrepreneur on Fire. I've had JLD. I was just telling you before the call. He's also been on the Dwelling Show. Just an all-around great guy. Chris, thank you so much for being on the Dwelling Show today. I really appreciate you.
Yeah, it's such a pleasure.
Yeah, so I mean, you have a pretty interesting spin on finance. So let's kind of jump right into it. Tell the our listeners a little bit about who you are and kind of what you've been up to lately, actually.
Yeah, so Chris Miles, as you already know, right? I actually live in Utah most of the year. I go snowbird in the wintertime because my wife's from the tropics, so she can't stand being in cold weather. So most of the year we're in Utah, but when it gets cold, when everybody comes out to go skiing, we flee and we go south for the winter. And I've got, between the two of us, we've got 8 kids, a blended family. So we got like a whole village in our house. Interesting side note. I mean, I've been doing this kind of work in a ways for the last 18 years. But the first 4 years, I actually spent being the traditional mainstream financial advisor, right? Telling you to save everything in mutual funds, save forever, save for the long haul. Don't bail out of the stock market when it goes down. Just put more money in. Like all the stuff you're hearing today, right? And I realized after about 3 or 4 years that all the financial advisors that I knew, right, and really all of them, right, if you took out their commissions they were making from selling products, they actually weren't financially free off their own investments. And I think that's one of the most impactful things for me, was realizing, wait a minute, they're not financially free. And if anybody should have it figured out, it should be financial advisors. Well, their clients aren't financially free either. They're still hoping and praying the market goes up forever, which it never does, right? The market only goes up on average less than 7.5% a year for the last 30 years. So it's a horrible return. And so 2006, I started looking for other answers. And that's when I met guys that were in real estate, right? Guys that were self-made millionaires in their 20s and 30s even. And they were like semi-retired. And I thought, I want to be like them, So I quit being
You're
a
a
financial
very smart man.
I know. I like evidence. I want things to work, and it did. Like, that's the thing, is like, I saw what they did and I was like, that's really cool. And so in 2006, I quit being a financial advisor, vowed never teach about money again. And then I was able to do, not just through real estate, but actually through other streams of income, even creating residual streams through businesses and things like that. I was actually able to retire when I was 28 years old, the first time. So in 2007, I came out of retirement to tell people how to get out of the rat race, to teach them how to do the same thing. Well, of course, that was right before the recession hit. I wasn't a great real estate investor at that point. I was gambling with my real estate, and so was everybody else I knew. And so I went from millionaire to upside down millionaire from like 2007 to 2008, right? And the next thing I know, I'm have no money, no credit, and I'm having to claw my way back out. I didn't file for bankruptcy, but I did slowly but surely dig my way back out of that hole, and I was able to retire again December 2016 for the second time. So when I tell people I retired twice, some people think, oh, that's great. Like, that's awesome. Like, no, it's not. Like, I should have only been once, but at least I was able to prove that you could do it twice, that it does actually work, that it's actually doing the opposite of what every financial advisor tells you to do. It's do what I call an anti-financial plan, right? It's do the opposite, do what actually works, do alternative investments like real estate. And it's proven to work. It's great stuff.
Yeah, so I mean, you've touched on a lot, but you did say one thing I kind of wanted to jump on was you said you were gambling with real estate. So what does that actually mean? Can you just kind of break that down a little bit more, just in case if any of our listeners are maybe doing what you're doing or thinking of doing what you were doing when you said gambling?
Yeah, you're a gambler if you have dollar signs in your eyes when you're looking at real estate. Like, if you're looking at like, oh my goodness, I can make so much on this deal, right? And especially if you go more transactional with real estate, whether you're wholesaling, which is fine, but wholesaling is not financial freedom. Wholesaling is a business, right? And you can make millions and millions of dollars doing that, but it's not passive income, right? But a lot of times I see people where they try to do a lot of flipping, right? Like they're all about the flip, and they do the flipping not because they like it, they do it because they see the sexy paychecks that come
The
from it,
dollar
right?
signs. Yep.
Yeah, because I mean, think about it, everybody that's out there. I mean, even people posting on Facebook, showing off their checks that they made on the real estate deal, right? It wasn't from them making, solid passive income of, 200, 300 a month per door. Like you don't ever see somebody say, look, I made $240 this month for my door.
Never.
Nobody cares about that, right? They're always like, look, I made 50 grand off this flip, or 90 grand or whatever. And then people are like, I want that too. And when you get caught up in that, that's when you're a gambler. But for those of us that have been around the block a while, we've been through multiple recessions, we've learned, okay, those are cool, right? And it's fine to do that, but you can't bank on it. You can't bank on appreciation, for example. Like I love the sexiest thing to me is steady income coming in each and every month. And it's hard because it doesn't have the big dollar signs up front, but when you start doing that
consistent, right?
Yeah, exactly. Consistent. When you do that year after year, pretty soon you start to realize I'm getting the sexy paychecks, but I don't have to worry. I'm not stressed out like some people are, where if you don't do that next flip, you're not making any money, right? Like, yeah, you made that big paycheck. Well, who cares? You got to keep doing that next flip and doing that next flip. Where if you flip to a passive mentality versus a transactional mentality, you go more passive. It's like, hey, these renters are going to pay each and every month, even if there's a virus. Most of them are still going to pay.
Especially when there's a virus.
Especially when there's a virus, right? They're going to keep paying each and every month. And I think to me, that has become sexy, right? Not the big paychecks. I don't mind it if they come, but I don't put my focus there. I put my focus on what's going to give me consistent, regular income all the time, where I have property managers manage my properties for me. I personally like turnkey. So I like to buy single family or smaller, like duplexes, maybe a fourplex, right? But I tend to do more of that. If I'm going to do bigger stuff, I usually go into a syndication, right? But I usually just go for the small, simple stuff, the thing that lets a family live in a home and it provides something of real value. And that to me is like one of the best, and not to mention the ROI on those things are ridiculous. Like, I mean, cash on cash return, I go for at least a 12% ROI, right? But I mean, when you factor in, they're paying down my mortgage for me, you start factoring in if there is any appreciation, right? Not even counting the tax benefits, where I basically don't pay any taxes on that income, right? When you factor all that stuff in, it's not hard to believe you can get at least a 20, 30% plus per year return.
Yep. And the
that
leverage,
to me,
right, compared to the stock market, right?
Oh my, there's no financial advisor will say, I can guarantee I'll give you 20 or 30%. They won't do that. One, it's illegal. If they do that, they should be gone, right? But on top of that, like, yeah, the market, the S&P 500 has only done 7.5% real rate of return for the last 30 years, average. And that's before fees come out. Even if you have an S&P 500 fund, you're like, well, it's okay. I have a Vanguard fund. Guess what? You're not making more than 6.5% to 7% a year. And when you look at those numbers over time, it's not that great. Right. Especially when they tell you you're only supposed to live off 3%. So say you even save up to $1 million, then they're going to say, don't pull out more than 3% so you don't run out of money before you die. So they'll say, pull out 3%. Well, 3% of 1 million is $30,000 a year. That's horrible, right? I can make that same amount of money with about $250,000 to $300,000 buying real estate right now, right away. I don't even have to save up to that much, right? I don't have to get up to $1 million. If I had $1 million, I'd make at least 100 to 120,000 a year off that same money that they're saying don't pull out more than 30,000 a year. And then it's like this, it's all bipolar, up and down. And if it goes down, all of a sudden you say, ooh, maybe I should pull out less than 30,000. I mean, think about it. You're a millionaire living below poverty level when you pull out that kind of money from a mutual fund.
I'm just laughing in the background. This is just really good stuff.
It's ridiculous.
Really good stuff. Yeah. And obviously that's what we do. Yeah. Dwelling, we syndicate multifamily deals, and everything you're saying is just right on, spot on. I wasn't even expecting any of this actually. I thought we were going to talk about something totally different. So I love it. I want to touch on a few things though. But maybe you have touched on them. You talked about the 17 secrets to free up cash today? I think our listeners would definitely want to know at least a few of those secrets and see if they can implement it.
Yeah, that was probably a typo. It should be 7 secrets to free up cash today.
Okay.
But yeah, that I mean, yeah, that you can actually find that. We're not going to cover all of them today, obviously, but you can find the free ebook on my website, moneyripples.com, that has that. It's a massive amount of pages. It's 28 pages, and that's because I put page breaks in there. So I'm not the kind of person to do that, you know. So, but anyways, yeah. I mean, there's a few key tips in there I think are key, especially right now, because with everything going on in the world, one of my big tips is these 3 things: is get lean, get liquid, and get out. Right? Those 3 things. Get lean. That goes actually with that first secret to free up cash. Just so you know, these secrets, quote unquote secrets, right? This came from me screwing up, you know, in the last recession. I stopped, by the way, in 2008, I stopped teaching people how to get out of the rat race. Because when I was back in it, I'm like, I can't teach that. That would be ridiculous, right? Like, I can't teach something I'm not doing. So I started teaching people what I was doing, which was getting resourceful, how to find money, because I was broke. I had to find money, you know? By the way, you're actually on mute. I didn't know.
Yeah, I know. I'm a good listener, so I don't want to interrupt.
Okay.
So that
I want to make
forces me
sure
to not interrupt.
I want to make sure I'm just not talking over you, you know?
No, it's okay.
But yeah, like Get Lean, for example, is I learned to track my expenses and my income, right? Both. Because see, savers, you know, people that live in scarcity, right? They're savers and spenders. Both live in scarcity, and you can't have freedom in scarcity. The only one that's truly abundant is a steward. Stewards take the best of a spender and saver and put into one. Because like a saver, they want to be wise with their money, but a steward doesn't just hold on to it and hoard it like a saver does, right? A steward says, I'm willing to use money. I'm going to put it to work for me. I'm going to buy that real estate property and invest it to create more cash flow and reinvest that cash flow to create what I call like an income snowball, where the income just keeps growing year after year, right? That's basically what a steward does. Always like, how do I make the best use of the resources I have? And so when you're looking at it, you want to look at your expenses, yes, but you also want to look at your income, because that's limitless. Expenses you can only cut down so far and then you're done. But income you can make forever. So look at both sides of the equation. Like, start really tracking it, knowing exactly how much is coming in, how much is going out. If it's not serving you, trim the fat, get rid of it. Like, it's just not good, you know? I've had a lot of people lately say, man, I've been saving a ton of money on eating out because I'm not eating out as much, obviously, right? That's great. You know, what will you do afterwards? You know, I love eating out too. I just went out this morning and grabbed a little, you know, snack, you know, smoothies for my wife to add to our breakfast this morning. You know, like, I'll still do that too. I'm not cheap. Stewards don't have to be cheap. Stewards actually say, hey, I'm going to be responsible, but I'm not going to like live my life where my life sucks. Right. So that's key number 1 is make sure you're tracking your money. By the way, a great tool to use is Mint, you know, using the Mint app or mint.com. If you go on the website, great free tool to use to help you track both income and expenses and downloads into one place.
I use that every single day.
Do you really?
I do.
Oh,
Yep. Yep.
Yeah, that's great. And that's a cool thing. If you do it daily, awesome. But you don't have to even do it daily. I tell people if at least update it once a week, that's great. Like, you're doing better than most people who just look at their bank account balance to see if they can spend money, right? So really, you know, that's what I mean by get lean, is really look for those best expenses to spend on. Don't buy crap, you know, that, and I don't mean like consumer type stuff. Like, it could be a membership to something, right? It could be like, people lately have been paying for gym memberships, some of them $200 a month. I'm like, you can't even go in the gym anymore. You know, buy your own home gym and cut out that $200 a month, you know, or, you know, whatever it might be. And so there's lots of ways to do that. Other things you could do. So so I say, get lean, get liquid, get out, right? So another one, get liquid. Right now, cash is essential. Like, the more savings you have, the more power you'll have in this recession, which, by the way, we are in a recession and possibly even going into a depression, you know, so you got to have cash. Cash savings is more important than trying to get debt free. Like, all those Dave Ramsey fans out there are going broke right now because they put so much emphasis on going debt free that they're not quite there yet. They still have to pay expenses anyways. And by the way, even if you're debt free, you still have to pay expenses. You never will be expense free, despite what you think. You won't be financially free being debt free. Because I know, because all those people that got debt free reach out to me and say, Chris, so what? We don't have debt. Great. I don't have any income. I have no passive income. I can't retire. I can't stop working. I'm still a slave, right? I'm not really free. So getting liquid, getting the cash that you can get is essential, right? This could be, this year might be the best year to cash out from your IRA or 401k. For example, if you're affected by the virus this year, by hours or your pay or anything, you can actually access up to $100,000 from an IRA or a 401k without a 10% penalty. So even if you're not 59 and a half years old, usually you'd have to pay 10% penalty plus taxes. Well, if you're affected by COVID, you can waive that 10% penalty. Then you just pay the normal taxes, which you would pay anyways in retirement. But now you can use that money today, and maybe we can use that to go buy real estate, right? Another thing, so that's what I mean by get liquid. It's like get as much cash as you can. Also, by the way, HELOCs, if you have a home equity line of credit, this might be the time to get it. In fact, you might already be too late, depending on when you hear this interview. So if you can get a HELOC and get the cash out, I would get it all out of the HELOC. Don't just leave it open. I would take the cash out, because every recession I've seen, banks will do this. If you have like a line of credit where you've got, say, $100,000 line of credit, if they see that you have a zero balance, if they don't close it on you, they will cut it down. They might cut it down to $20,000 and say, this is all you get. And so say that you did the whole sweep strategy where a lot of people try to use their HELOC to invest and pay it down. Dumb strategy right now. Worst strategy ever. Because if you're trying to pay down your HELOC, say you paid it all the way down and then they cut your line of credit back, now you can't get the access to that equity that's stuck in there. It's stuck in your house now. I would rather get that money out. And I had a client say, well, Chris, that's debt. That's horrible. I'm like, well, who cares? Like, if I get $100,000, I told him, I was like, I ran the numbers. I said, you get $100,000 out, your payment's about $400 a month. I said, how long can $100,000 keep paying $400 a month? And the answer is always the same, is, well, forever. Exactly. That's the whole point. Because if I don't even just think about investing, I also think about worst case scenario. What if you lose your job? If you lose your job, it doesn't matter if you're debt free. I mean, yeah, you might not pay a few $1,000s a month. Other than that, you still have to pay for your life. You still have to have savings. So it's better to actually have that liquid cash. And in fact, if I were to go back in time to the last recession, from what I learned, besides just, not buying great real estate, I would have much rather have had all the equity dumped in my house, had it back out, because I had 150,000 in equity trapped in my home because I thought I could just pull it out whenever I wanted. But that wasn't the case in the last recession, and it won't be the case in this one. They will cut it back because they know that people are taking loans right now, and just because they can get the money, but they're not going to be paying it back. There's going to be a lot of companies that will not be able to pay back the money, and there's going to be a massive fallout from this. It's going to be way worse than it looks right now. It's not just about when we open up America. This is going to be way beyond when America reopens. There's going to be a ripple effect of really just of failure, company failures happening here in the next 6 to 12 months. So anyways, I mean, not to put you doom and gloom, right? But that's why I'm saying, get that cash out. You need the cash liquid and out. By the way, Delta Airlines did the same thing. They pulled out $2 billion out of their lines of credit just to have the cash on hand. Because again, they don't want the banks to say, never mind, Delta, you look like you're going under. We're going to cut that back to 1 billion, right? They're like, nope, we're taking it out. We're holding it, and I recommend you do the same. And then the last one is get out. And that could be getting out of the stock market. It could be getting out of whatever's not serving you right now. But, again, this is not a recommendation. You just bail out of the stock market, but I am saying this might be the best time when the market recovered a little bit before the recession hits harder again. This might be your best time to get out whatever money whatever losses you regained. This might be the time to get that money out.
So if I'm a listener and I'm thinking, wow, Chris, okay, I kind of have some money on hand. So I'm kind of holding some cash right now, but I'm not being a good steward of that cash. I'm not deploying that cash.
Yeah.
And then you mentioned some kind of real estate. You mentioned turnkey, you mentioned syndications, which is what we do here, like I said.
Awesome.
What kind of real estate do you like to invest in? And what would you say to that person just kind of thinking through, the pandemic that we're in right now, and they have some cash in hand?
If you're wanting to go into multifamily, I would probably hold off. I mean, I'd probably wait, because most likely, I'm assuming you're doing multifamily too, right? So
right.
You're probably doing the same thing. You're being really scrutinous. You're trying to not pull the trigger on things. Say all right, I'm waiting for these deals to show up, but it might be several months before the really sweet deals show, right?
Right.
Um, so same thing. I say follow people like you and make sure that you're like waiting to hear like, all right, now's the time. Like Ola is saying, yes, like we've got an awesome deal now. Like this is what we've been waiting for the last few years because so much dumb money has gone into multifamily, right? Like so many people have never even done multifamily before and just jumped into multifamily. And I guarantee those are the same people who will be jumping out of multifamily. And that's where we're going to be buying cheap, right? So if you're looking for multifamily, like syndications, like be on the ready. It's okay to hold cash. Sometimes it might be short term. I mean, you might just keep it in savings. I have some clients where we do like this. If you've heard of infinite banking strategy with life insurance,
Yep.
like I actually help people design those to get max cash ROI returns. So you can actually invest with it too and double dip on your returns. So basically you can make money in two places at the same time using that money. That's one place you can hold it temporarily, you know. If you're doing turnkey could work, but you have to be in the right markets and have the right connections. You know, I see so many people say, Chris, I do turnkey like you do. And then I find out their cash on cash returns 6%. And I think that's not that I would never do that turnkey deal. You know, that's horrible. You know, you got to have the right connections. So that's what I recommend is, you know, if you're not finding great deals if you're looking to do turnkey, like single family homes, great. Now could be still a good time. Commercial stuff though, you're probably gonna have to wait at least into summertime before we start seeing really good stuff show up.
Awesome. I mean, Chris, I can talk to you all day, but you know, we just don't have enough time, so we're definitely dwelling into the quick rounds now. These are going to be quick questions, quick
Yeah,
answers. You ready, sir?
I'm ready.
All right. First question: what makes you, Chris, unique? What is that differentiating factor that separates you from the next guy or from the next girl?
You know, the biggest thing that makes me unique is I was like that Renaissance man, good at a little bit of everything, which was a weakness growing up because nobody wants to give you scholarships for being above average, right? But what it has served me here is that I can see the big picture and I can see ways to be creative. It's like Iron Man when he's like moving screens around. I see multiple options and how to figure out like how do we get the best, most effective results. So I'm the kind of guy that's like, if you're looking to get the best ROI, like I'm the kind of guy to find that path.
Interesting. I see some books behind you. So what was the last book that you read, and what was the one thing that you picked up from that book?
Well, okay. Well, last book I read was actually the Holy Scriptures. But if you're looking for a business book or an investing book, the last one I read was, I think I reread again, Start With Why was the last one I
Simon
read.
Sinek. Yeah, I'm
Simon
actually
Sinek,
reading.
yep.
Yeah, I'm reading his latest book, The Infinite Game. Fascinating.
Oh, cool.
Yeah, fascinating.
Yep.
Last question. Yeah, I think you kind of mentioned in the beginning of the interview.
Hmm.
What do you do for fun?
You know, I actually, one, I just zone out and do nothing, or I watch Netflix. I do that for fun sometimes. When I'm outside the house, I actually do a lot of running, you know, so you can't see it from this angle, but I've got like my medals hanging on the wall. I do like marathons, half marathons. So I'm kind of a big runner. Used to be a ballroom dancer. So I used to do that as well.
Fascinating. Yeah.
But, but yeah, now lately I'm, you know, 20 pounds older, you know, from what I was when I was a ballroom dancer. So now I've gone the running marathon route.
Nice. Awesome. Well, Chris, if there's somebody listening and thinking, wow, I really like Chris a lot, I want to get connected, you know Chris a little bit more. Where's the best place people can reach out, get to know you better?
Yeah, you mentioned earlier the Chris Miles Money Show podcast. I mean, look that up. I've got like 400 episodes almost, so
Wow.
definitely check that out. And then you can also go to my website, moneyripples.com. That's MONEYRIPPLES.com. And like I said, you can get that ebook on there about how to find and free up cash.
Chris, you're a legend. Thank you so much. Really appreciate you. Learned a ton myself. Thank you.
Absolutely. Thank you so much.